But right now we will have our first panel of the day, which is called 2023 Trends in the European VC Ecosystem and the New Macro Outlook. I would like to introduce the moderator of this panel. And if you would told me 13 years ago when I started in media that I would have the honor to introduce him on stage as the moderator, I would have told you that you were dreaming. So for a journalist as myself, he is an example of professionalism in the field, and even if it's a competitive field, it's one of the people I have the utmost respect. A round of applause for the editor of Ziarul Financiar, Adrian SECELEANU.
Thank you very much, Vlad, and I must also share that I truly appreciate Vlad, and he was one of the youngest journalists that attracted my attention, and I was one of the jury members to award him a prize, and it was well deserved, as we can see now. So
thank you.
That's why we keep meeting each other at these kind of events. Thank you. So hello everyone, and thank you first of all to the organizers for having me here as a host for this panel. As always, and as you can imagine, Ziarul Financiar is interested by figures, numbers, and what's happening in the market. So I feel very honored to be here and to hear what the distinguished guests of this panel are going to say. Frankly, I think I'm just going to say welcome, and to be sure to stay in the agenda. Not many questions are to be asked. So let me invite our distinguished speakers on the stage. So please come again. I'm inviting Camelia DRỹNGOI. Let's applaud her. From EIF, I don't have to introduce you. I think you are very well known. Also, I want to invite Daniela ILIESCU, Executive Director for the Romanian Private Equity Association, ROPEA. And also, again, Marius, Managing Partner, Catalyst Romania. Sorin, MAXIM, General Manager for the West Regional Development Agency. And I'm not sure if it's here, Cristian NACU, if he is... great, thank you. I haven't seen you in the... Thank you. Does everyone have a mic? Let's see. One mic. And let me... I would start the discussion by asking each of you, how do you see the context? What should we have in attention? Marius already said a few words, and I guess everyone here in this space knows that it's a climate with a lot of headwinds. It's not the joy that we saw, let's say, 2 years ago, 3 years ago, maybe a little bit of euphoria, a lot of attention to, let's say, vanity metrics for startups. Things are a little bit different at this point, and we see this also here in the local ecosystem. We didn't have some years ago companies, startups that grew so big so that they have to scale back. Also, we see projects that are closing down, so it's a little bit of a different climate. So I'm really eager to hear your perspective on this, on what's happening and what is catching your attention.
Bună dimineața, good morning. As a representative of the Romanian Private Equity and Venture Capital Association, of course we have I have access to a lot of statistics at European level, at CE level, at local level, but also contact and direct feedback from the market. And you started a little bit with some of the key concerns coming from the local entrepreneurs and local investors in the market. I would say, I think it's difficult to say in a single phrase where is the market and what is the status, because the information, there are mixed signals, and it depends a lot on the actually where each fund manager, each company is in its stage. And eventually, we know recently we have been through various so-called crises, which have become shorter and shorter and have significantly improved the resilience of all the market participants. If we look at numbers, for instance, 2022 has been a record year in terms of fundraising, investment, and at European level. These are, again, looking a little bit backwards, and we know, for instance, when we look at this market, when it comes to the activity of the venture capital players and private equity players, we look at 3 dimensions: the fundraising, which is always the starting point where you gather investors and you present an investment strategy, and then you close a fund. There is the investment activity, which are the deployment, which represents the deployment of the funds, and finally the divestment. So again, if we look at fundraising, 22 record year, it's amazing, but we know that closing a fundraising is a process which takes at least 1.5 to 2 years, convincing investors. So actually, this 22 has been the result of efforts done during 2020 and 2021. If we look at the sentiment, and we've recently seen a VC survey published by EIF, if you look at the sentiment and the expectations and where the current view of the VC players is, there is a lot of pessimism when it comes to fundraising, at least fundraising activities during 2023, because considering the macroeconomic environment and the impact of inflation, the high inflation environment in 2022, the other alternative investments with a better risk-reward opportunity in the market, some of the investors actually shifted their interest from the private equity and venture capital players to other categories of investments. Looking at still, if we zoom in from the European level to CE level and even further into the Romanian level market, we see a little bit a different picture when it comes to the dynamic of the VC market. I think it's amazing the fact that the more we come closer to this region, we see a more significant weight of VC fundraising and investment in the total activities of this private equity market. Again, the private equity market is assessed by reference to 3 categories of funds: the venture capital funds, the growth funds, and the leveraged buyout funds. VC market is growing out a lot in CE, if we look also at neighboring countries, and in Romania especially, if we look at the statistics, we published a report last year, and the current year report is also in the course of being published. VC fundraising is 50%, represents more than 50% of the fund raised here in Romania. So I think this is a positive note. I will leave also the other panel members to share their views, and of course there are many other dimensions when it comes to assessing the current status of the market. We have to look indeed at investment opportunities, at the maturity of the fund managers. The VC investments have been relatively young. We've witnessed actually, I think besides Catalyst, which has been a team which has been in the market for more than 10 years, most of the VC investment and fund managers have been raised and have been set up as teams in the last 5-6 years. So this is still a very young market, but we hope to see it further grow. Of course, there are also the opportunities, they also, the investment opportunities, they also give rise to the interest of investors. So it depends also, and we've seen a lot of activity when it comes to incubators, innovation labs, startup activities, entrepreneurial activity, and we definitely hope to see this further develop.
Thank you.
Thank you. I can only compliment with one thing, the very comprehensive things that Daniela said. From a fund of funds perspective, it is very positive to note that the Romanian ecosystem has remained a collaborative one. And I hope funds working together in transactions and building companies which can only benefit everybody as they grow and expand globally. And I can only hope that this will, that it will remain as such. And we hope that the IF we will be able to support that on one hand, and on the other hand, to create, as you mentioned, a lot of teams created in the new teams in the past 5-6 years. This was largely due to the launch of the government-funded programs that we are managing, and this is something that is a source of great joy for me. And I hope that we will continue to launch new teams and continue to support the ones that were launched in the past 5 to 6 years as they raise their second and third, hopefully larger funds.
Thanks, Camelia. So, as Daniela mentioned, we would be the veteran of the VC industry in Romania, with the first Catalyst fund being launched more than 10 years ago. I think it was 11. Yeah, 11 years ago. And already the second generation fund with Catalyst for more than 3 years now. Even though on, let's say, European standards, we would still be an emerging fund manager because it's just the second generation fund. Let's say on East European standards and Romanian, let's say, ecosystem realities, we would be already an experienced fund manager. And we have looked at the market from a larger perspective, especially since we have an extended cooperation with 3TS Capital, a larger fund manager from Central and Eastern Europe, based in Vienna, Finland, and Luxembourg, with a number of funds and vintages. And from all these funds, we can invest smaller tickets, larger tickets in earlier stage, in a bit later stage. All of it is either seed or growth capital, not buyout really. So in the first two categories that Daniela mentioned. And in terms of what we have seen on the market, and I will take now quickly the perspective of the startup scale-ups and then the perspective of the VCs. On the scale-ups, startup side, 2023 had some clear signs that something is happening, something serious is happening. One, most of the companies have difficulties in achieving their budgets and maintaining their year-on-year growth. And obviously there will be outliers, but this is something that we have seen, consistently across the companies. Two, going for financing and finding new financing became increasingly difficult for startups and scale-ups, even the ones that have relatively good performance in 2023, not to mention the ones that are stalling in 2023. Three, we see a continued issue with cash burns being somehow critical for the companies, for the startups and scale-ups, because as long as the companies are burning significant cash, they are, with a recent coined term, default dead. So if they don't find new financing, they will be dead in either 6 months, 12 months, 18 months, whatever the cash runway they still have. And finally, a lot of these companies decided already in 2023, I don't know, is it good, is it bad, maybe it's worth a discussion, to sort of pivot their strategies from growth at all cost to break even at all cost, or getting, converging to profitability as soon as possible. Because, and obviously, when you try to become profitable, you're sacrificing on the growth side. Vice versa, if you want growth at all cost, you can never, be, or you can not get to profitability anytime soon. Now, on the VC side, just very quickly, a few things that we have seen. 2023, as Daniela mentioned, until now, probably the lowest year in recent analysis years that were analyzed in terms of deployment of capital by venture capital. So even though based on 2021, 2022 vintages of funds and earlier vintages, venture capital funds have a lot of money to disperse. The money that was really dispersed in the market was minimal. Again, with some outliers sort of contradicting this theory, because also this year we've seen large Series A and even pre-Series A like FlowX or Druid and Romanian startups, or Dronamics from Bulgaria. All of the three actually also participated in listings on Seedling for crowdfunding. So very little capital deployed. Now we also experience a number of discussions and sort of sessions with our LPs, because on the one hand they say, okay, maybe we should deploy more capital, but then when we explain what is the general context, they say, okay, we'd rather be cautious than to go quickly and deploy capital in a context that is still volatile in terms of obviously valuations first off, but also some other things related to the evolution of the industry. So generally that would be the characterization, and in particular in Romania we have the situation that now we are in between two let's say vintages and two generations of funds, whereby there are very few funds, local funds, having real money to deploy. A lot of startups and scale-ups looking for money, because a lot of the funds of going to the second generation only maybe are even before the first closing, so they're not able to start. But hopefully 2024 will see a significant change from that perspective, and we welcome that change. What happens and what happened in 2023, and we've seen that, and we're happy to have in the room some of the regional co-investors that maybe co-invested even together with Catalyst Romania, that cross-border started to really happen, where we've had VCs from Hungary, from Bulgaria, from Poland, from other regions in East and Central Europe coming and co-investing here in Romania in interesting Romanian startup projects.
Thank you, Marius. Mr. NACU.
Good morning. Is it working? Yeah. So here I'm here to represent one of the largest development institution in the world for private sector in emerging markets. So I will try to give a bit of global perspective first, but also I'm here as a veteran of the private equity industry. So instinctively I feel that I need to be a little bit more positive than the gloomy picture that my colleagues have presented until now. I'm totally in agreement that 2023 it's a pretty bad year, especially if you compare it with 22, when it was a fantastic year for the entire industry. Now, in the same time, I cannot stop thinking that compared with the period when I started in private equity and we were just a handful of funds, today the number of funds which are aspiring to raise money are significantly more. And that is a fantastic thing in itself. Now, I cannot also stop congratulating the Romanian government representing and of course EIF as being the engine behind this movement, because in the past if you could raise money from fund of funds or pension funds or other kind of institutions, today it's absolutely clear that you cannot raise funds without the alphabet soup led by EIF, to be honest, but also IFC, EBRD and other IFIs, which is fantastic that EIF took this lead, and they mobilized the government and the European funds to put money for this industry. And it's fantastic that we have now a pool of money which is going to be put at work with the funds that will be selected. In the past, in the early 90s, this thing was done by the US government. Let's not forget that they they created 11 private equity funds in 11 countries, emerging markets countries. I represented one, I worked for one of the Polish American Enterprise Fund, which was the biggest and the first, but also Daniela, Romanian American Enterprise Fund, Bulgarian Enterprise Fund, Hungarian. So they did that in the early 90s, but after that, European Union and EIF took the lead, and rightly so, they did that for the environment, and it's fantastic that they did it. Now, can we do more as a country? Yes, fantastic. We have a pool of pension funds which are sitting on a pile of money. I really don't understand this reluctance on allowing them to put more money in private equity and venture funds, because the performance historically of these funds is a very good one, and they have very strong teams of professionals. So if we really want to make a difference, they should be allowed to put money in these funds even more. Yeah, 2023, it's I would say it's a normal consequence. The bad performance of 2023 is a normal consequence of a very troubled situation worldwide. And since these funds are usually regional, and it's good that they are like that, because also IFC invests only in regional funds. It's very tricky to put money in one country only. Since these are regional, it's normal that the funds will be impacted by global conflict situations like we are now experiencing, I would say, in more than just one place, and the size of which we didn't dream 10 years ago. So all in all, I think it's a difficult period, but I'm pretty sure that the teams will go over this and will continue their work, which is fantastic, because their performance is really, on average, it's very good.
Thank you.
Thank you. First of all, I want to thank you for this invitation. I want to congratulate the organizers, and I think this event should be spread at the entire country. I believe that 8 engines from the regional level will work definitely better than one engine, national one, concentrate in Bucharest, because it's a lot of energy at the local level, which should be somehow mobilized. Regarding the euphoria, what you ask, I think that state react a lot on this market and invest, practically calculating the amount is more than €500 million, 400 million from the Resilience and Recovery Program, plus 100 million from the cohesion policy. All that money will go in the market to the venture funds, or even to the accelerator. But if we take a look on the entire ecosystem, the euphoria is higher, but looking on the market, we need more projects, which means that we need to go deeper in the ecosystem, and to try to educate more and less on the age of the young people to understood and can become entrepreneurs. If you look on the private capital, which practically is part of this game, it's limited and become more and more limited in this period. And the state react, but maybe with a small delay. And this is the reason why the money came, but a little bit later than the market needed. And this money, €500 million, should be co-financed by the private. Probably this will be a difficult task for us, and this is the challenge. And my personal view is we need to transform this euphoria into a real project. This is the best challenge in the next years from my point of view.
Please keep the mic, Sorin. I was wondering if you could share what's happening with your VC project. Where are you at this point, and how are things going on?
Yes, we are a little bit unusual VC. We try to develop an VC at the regional level. Regional means not regional few countries in the area, means West region, because we try to, first of all, to use this fund to develop competences at the local level, to be a permanent support for the local entrepreneurs. We hope to have launching in December the tender, and we practically have two components there. One component for an accelerator where we invest 14 million euro and 26 million euro in one VC, where we hope to have minimum one local partner, which will give the the local flavor and the competencies which are very important for our market. And we hope to have this fund permanent at the regional level, not just on this cycle, and also after that to remain and to mobilize the local capital. Local capital means also local investors who somehow have money, but they don't have an appropriate vehicle and transparent one to invest. And I believe that, I really believe that they will do this co-finance from the local capital.
Thank you for that, and I think we can build on this discussion about public funding, public funds, and private investors. And I'm curious also to hear again your various perspectives on this, with new instruments, new mandates that are happening on the market, and what would be needed in order to have more private funding, and maybe you can share how do you see the balance between public funding and private investors, and what could be done to enhance the situation on the market?
From the perspective of the fund of funds who is bringing public resources to the market, for sure public money is not enough. Any sustainable venture capital ecosystem requires the validation of private players who invest and who also buy these deals, hopefully afterwards at a good at a good return for the funds that did the first investments. I think with the exceptions of the very early stages, the accelerators, the tech transfers, where the risk is so high that the role of the public investor needs to be predominant, and it is like this in every other ecosystem. As soon as we go into seed Series A stage, it is essential to bring in private investors. I think I will let Daniela say what is the perspective of the association on the developments that are needed to happen on the legislative side, because that's where I do not have a lot of competence. What I can tell you is that we feel that not only the pension funds, but a lot of other institutional investors are very eager to not only support the Romanian economy and enterprises, which is a very nice thing, but also to diversify their portfolio. And they are, at this moment, unable to do so. We have been through a number of iterations ever since we started the first Catalyst fund, discussing with pension funds, and then, let's say, something happened, and it was not possible. So a lot needs to be done in not only legislation, which can be significantly better explained by Daniela, but in terms of the mood. encouraging private investors to join the public one through us or through regional structures, because everybody is needed to play a part at a certain level, so that you know, that there is the expectation that there will be stability in that investment, that there will be an incentive to make that investment, and of course the expectation of a profit.
Can I please ask you to keep the mic for a little while? I was wondering if you could share if you see better, higher quality applications from those who come to you to get funds, because I'm curious, you have a perspective now for some years, so I'm curious also on this side if you see progress, if you see better written projects, better thesis, and how is everything versus the first generations.
I like that you are saying they're referring to better written projects, because this is exactly what I don't like to see. There is, unfortunately, also in Romania, there has appeared the tendency to write projects for private equity and venture capital. I think the people in these panels, including Cristian, they are smiling, because I used to work in in private equity, and being a private equity specialist is something that takes, like, I don't know, 10, 15 years to understand what it's about and to gain the psychological resistance to do it, which eventually, obviously, I did not have. So I think the fact that people are writing projects, and they are, and I have seen proposals that look exactly like one another, is very sad. But that is the nature of a public selection process, which we all have to do because it's public money. Now, on a more serious note, the encouraging sign is that there are a lot of proposals. And when you have quantity, you can also derive quality. And I have seen, of course, people see public money, a lot of them are confused because I'm doing investments of some sort. It means that I can also do private equity. Not the case. It's not to say that we are not encouraging first-time team, but you still have to, you know, be an entrepreneur, have been an investment banker, have been an M&A consultant, have been part of a team that has done investment and has hit their head against the wall in the real economy. So I have seen increased quantity, and I have seen something that I was hinting at before, a lot of collaboration in the market, people who are either leaving existing funds or people who are simply trying to switch direction in their career, getting together and building projects which really have look beautiful, and they are teams in which we, my colleagues from Luxembourg, from the equity investment department, who are performing the selection and have a lot of experience on that, in which we are able to put our trust, because it is a great responsibility for us to allocate these resources on behalf of the third party, which is the government of Romania, and we take it very, very seriously. So quantity and quality both exist at this point in the market.
Thank you for your answer, and also explaining the difference between perception and what's happening really behind the curtains. So coming back to my question, I'm eager to hear other perspectives, public funding, private funding, and balance between.
I've been lucky enough to be in a private equity firm during 4 fundraisings. So we raised 4 funds during my period in that fund, in that firm. So I can tell you, usually a fund manager doesn't want to have an LP which has a huge portion of the fund. In a normal market, let's say, when you raise money from different institutions, pension funds, fund of funds, IFIs, probably the best proportion would be nobody to have more than 20%, let's say. Now, we are not now in a normal market, because Romania is one of the latest developing markets in the region. So what EIF does now, that I think it's 50% EIF participation versus, or close to, is basically filling a void in the market. Now, it proves to be, even that, a difficult task for the fund managers to raise the difference, the other 50 or whatever, 55. And that is because, on one hand, as I said, the other institutions are not fulfilling their role, pension funds, asset managers. And on the other hand, because another resource for fundraisings like wealthy people are not yet familiarized with institutional management of funds, their own funds. I'm talking in other countries in the world, you see a lot of family offices running the wealth of the personal fortunes. In Romania, there is no such instrument. So normally, these family offices should be another contributor to the fundraising effort. In Romania, we're not yet there. And this is just a matter of probably evolution. Let's not forget, we are only 30 years old, democracy or capitalism. So probably it will come. It's also a matter of education. It's also a matter of trust. It's also a matter of performance. So I think this is a normal evolution.
We need time.
I'm afraid so. I'm afraid so.
It cannot happen overnight.
I think so, yeah.
Thank you.
Just to add a few words, indeed, I think both Camelia and Cristian mentioned the most important challenges faced by the local fund managers in their activity in setting up their funds. We at the association level, we have been, if we look at numbers, the picture is even worse. Approximately 70% of the fundraising, of the funds raised to invest in Romania have been fueled in by international financial institutions, leaving a significant, and thus we see a significant gap and lack of private capital and local capital. If we look at more developed markets, for instance, at VC level, at venture capital level, corporate investors are the highest investors LPs in fundraising by VCs. Afterwards, we see family offices and private individuals, and then also fund of funds. Of course, connected with innovation strategies, risk appetite, and so on. At local level, indeed, we have been having a lot of discussions with the authorities, and the legislation is not always, and is currently, the risk of volatility of the legislation is not encouraging actually the teams to set up funds here in Romania or to focus on the Romanian market. They prefer to look more at regional level or to partner up with other international teams. But again, if we were to think what would be the key measures or directions to be considered by government and by authorities in order to further support the growth of this market, I would say that the number one measure or decision would be that related to allocating more public money to support the growth and development of this market, and actually to allow and enhance collaboration with already existing funds and money, for instance, like this program, REF, Recovery Equity Fund managed by EIF. There are also pension funds legislation theoretically allows the investment in private equity, but at the same time the environment has not been very supportive in this, in support also for the fund, for the asset managers, and we've seen below 1% contribution or investment made by pension funds in the overall private equity funds as compared to 27-30% contribution at European level and around 8-9% at CE level. Furthermore, even tax incentives for individuals investing would be, when it comes to capital gain or other type of taxes, would be supportive to faster development and allocation of more private funds toward this class of investments. Furthermore, there is also, indeed, as Cristi mentioned, an educational process, but this takes time. Everything is a process of growth and understanding. We've seen yet a lot of successful stories, which I believe will definitely increase the confidence of investors into allocating in their future decisions of allocation of their capital.
Well, in terms of private versus public, our own experience with the second fund is that we managed, indeed in a different context a couple of years back, to come to our our last closing at almost 60% private capital, all of it actually raised from Romania. One thing about the geography of the private capital, usually any private investor will have a certain preference about geography, and we've gone to other geographies of Europe, and we've seen very little interest for a Romanian venture capital fund, because usually when either family offices or high net worth or other types of private investors are putting money into funds, they say, okay, I'd probably put money in a more in a wider regional geography like Central and Eastern Europe or emerging markets or frontier markets or Southeast Asia or Latin America or something like that, rather than a country-specific fund. So this is why we got back into Romania and started to discuss with potential investors, and we were probably helped by the fact that already having track record into our first fund, we could show the investors that we know what we're doing. That's one of the problems of raising funds from the private pockets, that they want to see track record. And most of the time it's a bit of a chicken and egg, because particularly in Romania there are very few experienced fund managers or teams, and if you go as an emerging team, on the one hand, of course, public funding and private investors sometimes will say, we'll encourage emerging fund managers or new fund managers, but then they say, still, we want experience and we want track record. So again, it's potentially a chicken and egg. So our result, this almost 60-40, which goes towards the private money rather than the public money, I think it's rare in the ecosystem, not only in Romania but also in the region. But again, that was in a certain context at a certain time. And coming to timing, nowadays I think it's much more difficult to do the same thing, even with an experienced fund manager and with track record, because we have this situation with this asset class becoming less attractive versus money market and high interest rates and so on and so forth. And we've seen investors now saying, okay, why would I go into an asset class that is considered obviously higher risk and not go into government bonds or other things that are essentially risk-free, and now the interests are relatively high. So in a way, and that's a pity, and it happens too much, I would say. Once again, the government, the states in general, the governments in general, are competing in an unfair way with private investments and private investors, because basically it's the same situation with the banks. The banks pay less attention to the private companies because they can make good money by just funding the government. And the result, we all see it, because there was a recent calculation that no less than 200 billion lei will be spent on interest only in the next 4 years by Romania, only based on what they have borrowed at relatively high interest rates, or including the government bonds that they need to pay the coupon for. So the moment, it's not I agree with the educational process. I agree that Romania is lagging behind maybe some other markets in terms of private capital, but I think the moment itself is a tough one for raising private capital, and on that one, it's not about 50-50. It's not about 70-30, because that would be the sort of the break point where you need at least 30% private capital, because particularly with public funding like the REF, this is state aid, and I think that's the most important problem, and it was a fundamental issue that we had with the first Catalyst Fund, that this being considered state aid, it comes with a lot of conditionalities, a lot of things that are not necessarily advantageous for the private investors who are investing alongside. So maybe asymmetric types of returns and asymmetric types of let's say incentives for private and public could work. Flexibility, and EIF has shown great flexibility, particularly with the COVID response. The percentages changed significantly. Not only they changed, but sometimes EIF would say to the fund manager, tell us how much you can raise from the private market, and then we'll try to accommodate something that works in order to be able to mobilize the capital and put it in the market. So these are a few things. And finally, this lack of real possibility for the pension funds to be in that asset class, which is a problem. Camelia mentioned it already. As an exception, we have had one pension fund investing in our first Catalyst Fund, and that was exactly Pillars 3. So basically, we're talking private pension funds, and yet this, because pension funds are just about the largest asset managers, and if you don't have that money allocated also for this asset class, not a lot of it, but a few percent allocated to this asset class, it's difficult to mobilize other types of private money.
Are there any signs that anything is going to change about this?
Well, it was back and forth with the Financial Supervisory Authority and legislation, because at one point it was like, okay, you can invest up to 10%, which was huge, but then, as the norms went, they were not really incentivized, because they would need to keep the asset at book value, which for venture capital is almost nominal. So basically, they would need to show a significant decrease in their assets before any exit or any transaction that would sort of bring the money back and the returns back, which is something that they unfortunately cannot accept. So a more flexible way to calculate the NAV, to value the assets, would be probably part of the solution, but so far we haven't seen a lot of progress. Daniela.
What I would like to add is that indeed after this legislation change is apparent, for the time being pension funds are allowed to invest in private equity funds, but up to 1% of their assets under management. If we talk about this general asset class, up to 3% if the government or public money are also co-invested in that specific private equity team fund, and even up to 5% if there is this co-investment together with the REF and the program under Recovery and Resilience Plan program. However, this apparently these percentages may seem, let's say, inducive or supportive to investment in this asset class, but still the 1% limit is very little. And what, let's say, the regulators do not understand is that it takes a lot of knowledge and time to build up also knowledge within the asset manager of the pension fund, knowledge on how to manage this investment. And you need a certain size or, let's say, percentage out of your assets in order to have also an efficient operation or an efficient return, a good return from this investment. And another important element is the component or the mindset of investment, because pension funds are by their nature long-term focused, I think it's very important for everyone who is, let's say, connected with this market to understand that having also a strategy, an investment strategy which looks at long-term assets is a very good risk management. And if you look at, on the long-term perspective, private equity sector has always, there are some international statistics, has yielded even better, slightly better returns than the average S&P 500 or other stock exchange indexes over a long-term period, over 20 years. If you look at 10 or 15 years return, still this asset class is yielding very good returns, despite the cycles and
I was wondering if we could expand a little bit the discussion about pension funds and what they are investing in. Are we different at regional level? Do you see different trends in other markets in the region? Are we more conservative than others? How, if we weigh in on the bigger picture, how are we standing?
If we look at the balance sheet, again, the most important suspects would be the Pillar 2 players, which have 20 billion euro assets under management approximately. Fortunately or unfortunately, 70% of their balance sheet is, of their investment is represented by treasury bills and state or government bonds. The rest of approximately 20%, I would say, represent investments and exposure to the capital market, to the stock exchange. We've seen them as being indeed the highest investors, the largest investors in the capital market. And then the rest, very small percentage, is allocated to other bonds or private bonds and so on. So this is the current let's say, picture of the balance sheet of the investment classes in Romania. If we look at the more developed markets, as I mentioned earlier in CE, out of the total funds raised, pension funds contribute with approximately 8%. If we look at more developed, the European market, in 22, pension funds contributed 27%. This is a huge percentage, and it's a significant contribution, and it's obviously a very different investment strategy, showing a much better understanding of how the market operates. But having such a size in your balance sheet as a pension fund also means having the infrastructure, building up teams, knowledge, and investment managers who know how to manage these investments, to whom, to which teams to allocate, to which markets, and to how to build up a proper strategy.
Yeah, maybe just quickly about the region, because I just came back from InnoWave Summit in Bulgaria, and there is a kind of a similar problem and discussion there. Ongoing, still pension funds are not, for some reason, able to invest in venture capital and private equity over there. But there is also a discussion similar to Romania that this could actually mobilize a lot more of the private capital into this asset class, into risk capital, into venture capital, private equity. And one thing maybe where Bulgaria is slightly ahead of Romania is they have, as a number, they have significantly more venture capital funds because they started early with the first Jeremy program with 2 instead of 1 fund, and then this generated more and more teams. Sort of success breeds success in a way. Of course, with some ups and downs also in their first Jeremy funds, but nevertheless, they also took one initiative which I appreciated. I don't know how really is going, but they were ahead of us in terms of this fund of funds that is government funded in Bulgaria. So they already have this fund of funds, like Poland has one, like Hungary has one, and so on and so forth. And I think it's time for Romania to have one as well.
But is pressure building up, let's say, on this direction to have pension funds investing in this kind of assets, and do they want? Do they want to be able to do that?
We have discussed both at association level, because we are a member of ROPEA, and in terms of fund manager, we have discussed formally and informally with various large pension funds from Pillar 2 particularly, and there is a lot of interest, but they are sort of having these issues with the typical J-curve that we show in our activity, because one thing, a bit like startups, venture capital funds also start on a loss, because the first thing that you start with is cost. And before you can value your companies, your portfolio up, which can happen at transaction or can happen based on fair market value, but certainly not less than 1 year from the initial investments. So basically you start with cost, and then an asset manager investing, pension fund saying investing in a venture capital fund will have to write down a bit of the asset value in the first quarter, second quarter, third quarter, and so on and so forth. And this is apparently a very big issue for them because they are sort of under some type of a public and general scrutiny, and they cannot afford to show this kind of evolution. Even though this happens with their stock market assets when the market is generally going down. So it also happens in other asset classes. But in this one, we know for sure that this J-curve will operate like that, and hopefully, potentially, after a year or a couple of years, it goes back into positive territory above 1x, and then going into, as Daniela said, outperforming the other asset classes in terms of yield return.
But Marius, this is not happening only in Romania. I mean, all the pension funds are going through the same problem. So probably it would be easier to just learn how it's done in other countries and replicate it in Romania. I mean, I don't see this being a problem. It's just a matter of regulations, and the fact that they are comparing yields from T-bills with the IRR that can generate a private equity or a venture capital fund, it's a mistake. I mean, we all know that the IRRs in private equity and venture capital should be 15, 20%.
Double digit anyway.
Double digit anyway. So it's not even comparable. I mean,
I know, we know that, but somehow, I think it's also this and I have this problem in discussing with a number of people from the ecosystem that I'm already telling them that in fact our perceived risk is much higher than the real risk that we do, because we have diversification in terms of portfolio, now also in terms of geography, because Catalyst Romania is also the Fund 2 is also the first Romanian fund which can invest in a larger geographical region of Southeast Europe, stages, sectors and things like that. You can diversify your portfolio so that, of course, on the average of the portfolio, you're making a nice return, even though you might have some loss here and there.
As we have only 5 minutes left, I propose that everyone can share a few words on what to expect. Basically, it's what we announced. It was the title of this panel, Trends and Outlooks. So I guess every speaker, 1 minute, what should we expect, and what do you see happening in the future?
Yes, for me this discussion is like in the tennis game. I look like this because it's very complicated with this higher level of decision regarding the pension funds, but because in fact if we increase the number of projects, it's a statistical approach which definitely function. If we increase 10 times the quality or the number and the quality of the projects, definitely we have more application, we have more projects finance, and we have more money invest, and we have more results, and we can build the trust. In fact, it's a problem of trust, which is together with the minimizing the risk. And I do believe that these kind of events and in general explaining to the people more and trying to go deeper in the society with this kind of tools, we will increase the investments, and we will increase the benefit for the society. In fact, all these projects should contribute on the increasing the quality of life of people, and should be not necessarily just super high-tech projects with global impact. Can be also local projects which can do businesses for regional purpose. This is my belief, and I will end here telling that we try to support also the venture fund at the regional level, not just giving the money. We try to develop, you know, a lot of tools around an ecosystem to finance innovation, to finance venture vouchers for innovation, to support the universities, also to adapt them system, also to adapt the intermediary owners to contribute all of them to this ecosystem. I think it's very complicated. It's not just one shot. Everybody should do something little bit to increase the ecosystem. This is my view.
Sorin.
Thank you.
Mr. NACU.
I'm a big fan of this industry. Of course, I'm biased because I was part of the industry for many years. But I think it's a great industry. It creates a lot of value. It creates a lot of employment. It's probably also as a professional, it's probably the most rewarding industry in the whole financial sector. I think, and this is obvious if you look at the number of private equity funds, for example, in the world today are probably 15, 20,000, less than 20, 18,000 private equity firms, which is double than it was 10 years ago. So it's clear that this is an industry which is growing very fast. I'm confident that in the future it will continue to grow and it will produce value. I think these periods like now are kind of normal if you look at the long-term period, and I'm pretty sure that they will overcome these difficulties in fundraising now with a bit of help, and I really hope that the government, the authorities will understand that this is an industry which is very beneficial for the country, and it creates a lot of value, and they will continue to support it, or even more in the future.
Well, for me as well, certainly long term, we have a bright future ahead of us, but to focus a bit on the short term and to try to guess or estimate or guesstimate what could happen in the relatively short term, we'll probably see from now into 2024 a lot of down rounds in terms of the investments done in the venture capital, which is to say that a lot of companies who have gotten funding 2020, 2021, maybe even the beginning of 2022, had very high valuations usually attached to investments, and now they have to acknowledge the fact that the market has gone through a correction. Part of it is the natural correction, part of it maybe is the oscillation that takes, you know, from high to low and even lower than where it should be. So we're talking down rounds, smaller valuation, which is diluting significantly founders and former investors. So that's an important thing that we need to keep in mind. Partly because of that, partly because of the slower deployment of capital that we've seen in the markets, and it's not only Romania or Central Eastern Europe, it's all of Europe. We will see quite a number of internal rounds of financing rather than external round of financing, and those internal rounds, probably also in order to avoid the valuation haggle, will be done in a convertible type round. So basically not putting a valuation, not a priced equity round, but rather a convertible loan agreement or something of that kind. And then, you know, trying to help the companies, existing investors, trying to help the companies to overcome the cash burn through this period, and then go into a next season when maybe financing will be easier again and valuations will be on the rise again. And attached to this convertible loan agreements and internal financing rounds, there will be a pressure, and we see that pressure, even to some extent, I think we go with that pressure to our portfolio companies to be more concerned about the sustainability of their business model, which is to say that, you know, reducing the discretionary spending, and as a result, you see, and you have seen in the press, and you'll see more and more of that for big companies, medium companies, and even startups. They are reducing headcount, sometimes significantly reducing headcount. It doesn't mean that those companies will necessarily default or will have big problems. They need to adjust. to use a coin term, to right size, not necessarily to downsize, but to go to the right size for their present activity and future activity. And all these cost optimizations and cost-cutting measures should lead into more nimble, more versatile, more agile companies that go towards an idea of sustainability and break even, rather than, okay, we need to grow, we need to grow, we need to grow.
Well, at the European Investment Fund, at general level, at institutional level, of course, we are focusing on directing as much as possible our resources into the prevention of climate change, into stimulating more participation from women into this industry, which unfortunately does not always represent well. And we are also promoting a very important initiative to try as much as possible to keep global scale-ups in Europe through the European Tech Champions initiative, which is a multi-billion European initiative in which member states can participate. In Romania, of course, on the immediate term, we are focused on working together with the government, in particular the Ministry of Investments and European Projects, to continue to implement the Recovery Equity Fund, the other existing initiatives, and to provide stability to the ecosystem through our presence here as an independent actor.
Thank you. And the pressure is on the last speaker to speak the shortest.
Shortest, and I will try to end also a bit in an optimistic note. When it comes to fundraising, indeed there are a lot of struggles currently, but those who will manage to overcome these struggles, even if we look only at the amounts approved by REF, and up to a full amount of PNRR, we can look at a medium to longer term perspective that 800 million euro will be available, almost 800 million euros will be available as funds for investments in Romanian SMEs and companies, which will further support the growth of the economy. That's one side. The other side, if we look at the investments and the current negative trends of multiples, having lower multiples, lower exit values and lower entry values, if we look at the bright side of this aspect, is that funds which are investing in this period of these vintages, let's say 21 and 22 vintages, will have the opportunity, assuming they will know how to, let's say, further grow their business, their investments, will have the opportunity to yield better yields and returns to their investors, because we know most of the IRRs, best IRRs are when you invest in slight crisis or post-crisis periods. When it comes to divestments, also we've seen struggles in this market because there are not so many large private equity funds, not so many, the stock exchange market is not that developed, but still optimistic. If we look at the most recent transaction announced by Mid-Europa Partners, which is indeed a very large fund, but has managed to exit a very successful business, which was actually initially set up by also and developed by a private equity fund. We've seen an enterprise value in this transaction of 1.3 billion euro. This puts Romania already on the map for transactions at not only a significant transaction regional level, but also European level. So I think we've seen a lot of good progress in the last 2 years in this market, and we hope to continue this pace at this pace in the following years.
Thank you for ending on an optimistic note. Let's applaud our speakers for sharing their ideas and knowledge.
Thank you, Adrian, and thank you all for joining this first panel of